Plus a lot more. We have Larry Shover. He's in the pits of the CME Group. Bob Phillips telling us why the recession, according to Bob, is already here. And legendary investor Wilbur Ross, who needs no introduction, telling us where he is investing. Let's start with Larry Shover over at the CME. And Larry, I know as we talked with Nicole that Hewlett-Packard was bringing down the whole index. But in fact, you look at oil, you look at that, it's hard to, you can't call it a crash, but a 4.25% drop in oil is the biggest drop that we've had in months. Doesn't that show you that we're at a tipping point here where the weakness in the economy may finally spill over into the stock market?
You know, it might be one of those things that does tip over the stock market, being down 4%, even though I like the fact, I don't think the market likes that. And right now, we have lost steam. We've made up some of that steam, but being down 4% the oil price, that might be something that leaves a hangover for tomorrow morning, given all the moving parts we have and saying, hey, we are really in contraction. It could be a start of a big downtrend in the market.
Talking about a downtrend, Bob Phillips, you have an S&P target of 1250 right now. Is that correct?
Yeah, that's right, for the end of the year.
Go ahead, Bob.
Yeah, for the end of the year. We look at what we're worried about is you look at the S&P so far this year and you break it down in terms of earnings. And earnings, the first quarter this year grew about 7%. Second quarter year over year is about 2%. Expectations are for the third quarter to actually be down about 1% from last year. But all of a sudden, the fourth quarter, about a 14% increase over last year. And then all of 2013, we're expecting analysts expect double-digit earning growth. And what stymies us is that if you look at sales growth since the December 2008 on the average S&P share, it's about 16%. So where the growth comes from in sales to drive growth of earnings is really hard for us to discern.
Well, it's pretty simple. Without more sales, you won't get profits, and without profits, eventually you'll get a down stock market. But you go beyond that. You think that we are actually now in a recession, Bob. If we're in a recession, when do we see the sell-off?
David, I think when momentum starts to break in terms of the market's moving up because of momentum from the price increases. So a lot of that happened, I think, beginning with anticipation of the Fed doing QE3. And I think the first bout of bad news that comes causes a sell-off. I think we're in a trader's market, not an investor's market. So people that have their money invested, like a lot of our clients have had, that don't want to go through another downturn ought to be taking the advances we've had and take the opportunity to protect some money.
Hey, Larry, bring you back in here. We have the debates tonight, and what we've seen is the market kind of just drift higher to these multi-year highs in many cases. Is the market pricing in an Obama win at this point?
You know, unfortunately, sadly, yes. We're pricing in an Obama victory right now. We're pricing in a Senate victory. The Congress will be kept by the Republicans, but yes, they are. And, you know, it could be game-changing tonight. I mean, it's high-risk theater. If Romney comes out and forgets about bashing Obama and starts talking about his plan, what he's going to do to create economic reform, lower taxes, lower corporate welfare, I think that might be a game-changer in the market, but he has to do that tonight.
All right. Well, Bob, despite the fact you think we're in a recession and we are going to have a sell-off as a result of that, you do have some stock picks. I was interested in one, Holly Frontier. It's a refining company. Why, if you think we're going into a recession, would you be interested in refining if we're going to be cutting back on fuel?
Well, I think, that, David, the key reason is Holly is currently trading quite cheaply, about 6 times earnings. And it really gets back to where their refineries are positioned. They're in the middle part of the country, the Rocky Mountain area, the southwest part of the country. And they're able to refine the heavy oils from coming out of Canada and from the shale plays in the U.S. So we think they're perfectly positioned to use cheaper stocks of oil to produce, gasoline and the liquids that puts them in a spot few others are in.
Hey, Bob, you also like Coca-Cola. What's behind that? Is that your typical emerging market play or something else you're looking at?
Well, it's a combination of being defensive, big company, incredible balance sheet, incredible brand, well-positioned in emerging markets. So if you're looking at having a stock to hold, Coke pays you a nice dividend, close to 3%. And we think it weathers any storm, and there's growth for Coke long-term in the emerging markets. And it's a great kind of double play, defensive and growth.
All righty, guys. Thank you very much. Bob Phillips, thank you. Larry, we're going to see you in a couple of minutes. S&P futures just closed. Let's go back to Larry Shover at the CME Group. So, Larry, what does it look like for tomorrow?
You know, right now we have so many moving pieces in the market. Consider Bank of England, FOMC, ECB, Bank of Japan, and the Romney debate coming up tonight. We have a lot of things going on. The market's held up quite well given all that. It seems like everything is priced in, everything's status quo, but we will see. It could be a big game changer, especially tonight.
Larry Shover at the CME. Thanks, Larry. Appreciate it.
Let's head down.